Welcome back. Now, this week opens with the global PMI surveys and with the U.S. monthly employment report, which collectively provides some key insights into central bank policy paths globally. Scope Markets Chief Market Analyst Joshua Mahony joins us for a preview of the economic week ahead. Thank you so much for your time, Joshua. It's been an explosive day in the markets. Quite surprising considering the fact that there was a little bit of calm after Donald Trump's inauguration. I can't even remember, was it 2 weeks ago, a week and a half ago? Everything's just been happening so quickly. But I mean, there was calm because it seemed that his tariff threats were just that for a while. But now things are actually materializing. Talk to me about how bad the situation is.
Yeah, I mean, look, everyone's been focusing on the fact that Donald Trump's pro-business and he loves the stock market. And if you remember when he was in power previously, every time the S&P 500 hit record highs, he would let us know about it. So we have those memories. But if you cast your mind back, you should also remember the fact that every single day, myself and many other people in the markets, we were talking about wars with China and the breakdown in global growth and things like that. And this is just a reminder of that, right? It's not all going to be absolutely perfect in the world of Trump. He's going to push back against different countries. He's doing exactly that, but he's doing it to his neighbors. 25% on Mexico, 25% on Canada, 10% on China. He's talking about hitting the EU as well. So potentially massive upheaval, and that of course has knock-on implications when it comes to the growth outlook and potentially inflation, and that's why markets are really taking a hit.
Well, I mean, it's quite interesting because you would think that because he's always about putting America first and really the consumer at that. What impact could this have? Because, I mean, would it not be a case where he's saying that this should benefit the consumer, but actually it's doing the opposite?
Well, look, Donald Trump's very good at saying anything. It doesn't really make a difference of whether it's true or not. He'll just tell you, tariffs aren't inflationary. But then when he comes into power, he said, well, prices might move up, granted, but, sometimes you have to do these things for the greater good over time. And so generally, I mean, politicians do this as a whole. You start to see more of the truth come out once someone's actually in a position and they've actually won the election. And now he's showing his hand a little bit more. Certainly they've been behind this whole US-centric approach of America first, but yeah, ultimately it's all well and good when other countries just roll over and then you get a better trade deal. But what happens when the other country then imposes the tariffs on you, and suddenly the consumers are having to pay much higher prices? So potentially significant upheaval depending on how things go.
Yeah, it's quite interesting because you talk about these, how these tariffs could potentially break down global economic growth. But just looking at the U.S., of course, one of the pillars of that growth is the labor market. And we do have the non-farm payrolls for February coming out. Just thinking if this is maybe just going to be another data point that emphasizes how strong the U.S. economy is and probably will remain.
Most likely. I mean, quite frankly, we're used to looking at the jobs data and thinking, is it going to be too hot and that is inflationary? Is it going to be too weak and that pushes the Federal Reserve into doing something? Recently, it's been relatively hot, unemployment largely flatlining and not necessarily picking up to the degree that we're seeing in some of the other regions. I would say wage growth potentially could be an area which might ignite inflation fears if we see that moving towards the upside. But we've also got to look at this through the lens of data right now is backwards looking, and with the potential for these big tariffs coming into play, everyone's going to take all of these data points with a pinch of salt because they think, well, even if it's good or bad, what's it going to look like in a month's time or 2 months' time when tariffs really just completely rejig the way that US businesses and employees are having to work under. So certainly, it's going to be an interesting report, but everyone's going to be looking at it through the prism of, how things going to look down the line.
All right. Well, I mean, another thing that Donald Trump has been very strong about is the fact that central banks need to bring down interest rates. Of course, the Fed not really listening, as we saw last week. The Bank of England has its meeting coming up. We will get that decision on Thursday. Just talk to me about the backdrop behind in which the Bank of England will be making that decision.
Yeah, certainly. I mean, interestingly, actually, on the US front, they pushed Donald Trump to say, the Federal Reserve held rates, and they thought he was going to come out with some comments that were slanderous towards the Federal Reserve. He said it was actually the right decision, which is an
Okay.
interesting one. In terms of the UK, certainly expectations around about 94% chance being priced in by the markets of a 25 basis point cut. There's an expectation that we should see a second cut by the middle of the year, essentially. So two cuts in the next three meetings, and roughly three over the course of the year. So that's the backdrop within which markets have to gauge whether we're going to see more or going to see less. There's been significant fears around the idea that the Labour Party, when they came in and enacted these new policies to raise funds, essentially, of raising the national insurance contributions on businesses, that might get passed on in terms of higher prices. Also raising the minimum wages, that could get passed on as higher prices. So there's significant fears around inflation off the back of those announcements. We haven't necessarily seen a huge amount. We have seen an uptick in terms of the wage numbers. So we are expecting a rate cut, but it's going to be probably a patient approach, essentially, given everything that's happening around the world, and there's a lot of upheaval. So that whole, data dependent approach that all the central banks are going to take, that's probably going to be more prominent than ever, given the question marks that you and I and everyone around the world have in terms of the direction of travel for UK economy, but for global economies as a
Yeah.
whole.
All right. Well, thank you so much for giving us insight into what is coming up during the week. We will surely be keeping a close eye on all of those events. Do have a good day, Joshua. That was Joshua Mahony, Chief Market Analyst for Scope Markets.